Hey traders, Nick here. Wanted to recap week ending 7/6. I'll try to keep it short. Short story, we'll start with Friday. Friday 7/6 was supposed to be the end of the world as we know it, because that's when the 34 billion tariff actually comes into play. So President Trump ratcheted up the rhetoric to the maximum. How's that? He not only said last night the tariffs are actually going to go through, and they did. He also said that we're ready to dial it up to 500 billion. That's $500 billion, folks. Not only a big number, that's all of the imports that we get from China. So there's no higher number than this one on China. You can dial up the rhetoric somehow somewhere else, but as far as the size of the trade war here with regards to tariffs on stuff we get from them and them getting from us, we dialed it up to the max. So the world should have ended, but it didn't. In fact, the markets closed really, really green. And we had a jobs report that was, it was a good number, but it wasn't hot. So you can see immediate reaction. That was the TLT, which bonds spiked, rates fell, and all kinds of wacky stuff happened. The dollar fell because we don't. The Fed, the perception is with a weak job number, and at least not hot job number, the Fed is not hurried to add more rate hikes, so the dollar falls. All right. Having said that, the week, how did that end up? Well, let me show you. We can see that in pictures, and I believe I have it right here. So this is a snapshot of basically what I look at, and I'll try to walk you through it. I may have to zoom in. Okay, so we have the S&P green candle for the week engulfing the one before it, so reversing the 3-week downturn. The NASDAQ, I don't want to call it a downturn. 2 weeks ago we had an all-time high. This one erases the bad week quote, bad week. This is all-time highs, so it's just green week. Small caps, gosh darn it. Okay, let me see here. All right, there we go. That's part one. And there we go. Small caps, also a green week. And if I go to plus, no, anyway, how about that? There we go. You can see the green candle right there, engulfing the red candle before it from last week, and so close to all-time highs. And I shared a write-up earlier in the day. All right, out of that. All right, so that's the major indices other than the Dow. The Dow is just 30 stocks and the manipulated, and even that is green for the week. The banks may have made a statement today. They were really red and then flipped to close really, really green. So watch that. The XLI, you can't see it here, but trust me when I tell you, it needs a bounce. Otherwise, a lot lower they can go, but those are hit hard by the tariff headlines, so we shall see. Fear lost out, and I'll show you that later all by itself. This is to be concerned about a little bit. The bond market is still hot, which means rates are not going anywhere. As long as bonds are rising, rates cannot rise. So everybody's complaining about the Fed, scared about the Fed raising rates. The Fed only controls the overnight lending rates. So short term, basically, what banks pay in order to borrow money, they turn around and lend it to us in their own. So if bond yields are rising, falling, then the bids for bond is rising. So why is that happening? Because of what's going on with Draghi land. Abroad, they are not raising rates. So if the ECB bonds the European bonds are at zero or lower, which they are, then people who want to invest in bonds are forced into buying U.S. bonds. So the bid for bonds is higher, therefore the yield is lower. All right, so FANG, close to all-time high. Short story for the week, green for the bulls. Win for the bulls. Last week, I said that the bears missed out on an opportunity to put away the bulls, and that's what it looks like in real life. This is the S&P. We had this situation going. They busted through it. You can see it right there. But they decided that, hey, we don't want to take the extra step. But this was a well-consolidated bottom, short-term bottom. And the bulls took the reins and went through. Now, one thing that surprised me today was these two boxes. Let me see if I can zoom in. We're talking levels now. So I moved on from the week being green to now levels. I did not expect this big of a move. I expected a move, but not this big of a move, to slice through prior what should have been resistance, because that was an accident scene right here, and they sliced through it on the way up. So the upside was pretty big. Surprising to a lot of bears, I bet you. All right, so that is one set of levels. Now, the other one is IWM, which are the small caps. This is the all-time high, folks. That's a basket of 2,000 shares. Again, they came to the accident scene and took it all back. And now they rest just above it. It's like this whole thing never happened. But how strong of a floor is it? So I expect if next week is quiet with regards to new headlines, then we could possibly reach higher and even get a new all-time high, and I shared the trades that I would do there. The Qs are important to look at because that is the NASDAQ. This is heavy with Apple, Google, Facebook, Amazon, Microsoft, Tesla, etc., Netflix. So if you want to think FANG plus A for Apple. So this is the important part. So as far as fear, the bears had a chance. This is another way of looking at how they missed it. Look at that ledge from which they fell here. So they had everything going for them. Then they bounced, and they did it again. And this is an inverse cup and handle. They even went below it. This should have triggered some real selling to the tune of this magnitude. So technical sellers follow that. So this should have gone down on the Qs. But they didn't do that. Instead, they double bottom, triple bottom, whatever you want to call it. They traded inside of a box, and today they, boom, broke out. Exceeded, got to the scene of the crime, the accident scene. So they tripped and fell. They caught their footing, they went back straight to it. What they do next week, just like the small caps, depends on the headlines. If there are no headlines, why should they sell Apple, Google, Facebook, Netflix, etc.? So that's my thought. So I am long a lot of these names that I've been sharing, and I've been trimming, and this is the logic behind why should they sell them. Earnings are coming. These guys deliver real good numbers. Nobody's going to miss their numbers, so we shall see. All right, so that's the Qs. So the inverse, to show you the opportunity lost from the fear perspective, I'm going to zoom into maybe 2-hour charts. Okay, perfect. So this is an inverse head and shoulder. That's the opportunity. People were panicking. And this is a bullish pattern for fear. And right here, they crossed over the trigger lines. You know, fear should have busted out. Target should have been at least this, not at least, about that. Actually, technically, it should have been this size, but I usually look left and see this was the eyeball target based on from where they fell, this zone right here. But they failed. And look at that. They set a lower low than the last drop. So there's no appetite to be afraid, if I can say this. All right, so that's where the opportunities missed. All right, as far as levels, I already mentioned that. So basically, the recap is easy. This week, the bears had a chance to put away the bulls, and they didn't. Which brings me to saying there are no bears. Everything all the selling are bulls booking profit. That's my opinion. So if somebody rode this up, these are people who rode this up. They're not people pressing the bear, because if they were pressing the bear, then they would go this way too after a little route. So they'll go down, they'll have a Z. Okay, they didn't. So that tells me that these are bulls just waiting for an opportunity. They roll out of this into that. So the IWM is the easy way to hide from the tariff thing, but now the tariff threat is probably gone. But I did share a lot of thoughts there via the other video, so I won't share it here. All right, next week there is headlines, if there are headlines. If not, we do have scheduled headlines, which are mostly just reports, economic reports. I think we have a lot of inflation data, which is important because it tells us what the Fed it implies some thoughts from the Fed. So high inflation would be bad for stocks because perception is the Fed's going to tighten one more time, extra time or something. So that's the thought. To me, it's not a concern, but to the market it is. All right, tons of opportunities. I wish I had more time to share them all. I'm going to try to share more in video and more detailed write-up throughout the day. And these are conviction trades. Like I shared gold trades. I shared IWM, somewhat conviction trades. I shared even Netflix trades. And after hours, late in the day, I also shared in the chat room, I'll write it up next week, something about Netflix. Booking.com, which is Priceline, the mother of all momentum stocks. So that's how it is. If you have any questions, Nick signing out. You know where to reach me. One last thing on open interest. There's plenty of room to go in either direction. So if you look at the SPX, which we rarely do these days, but let's look at the SPX, that's the S&P. There's plenty of room to go to here and here, but there's more support down here than resistance above. In fact, for the small caps, there's no resistance from the open interest. These are actual positions in the options market. One thing, if you remember, I said there are two scenarios recently, 2755 versus 2655, I think I said. Well, today it's closed at the ES minis is 2762, I think. The high was 2765 or 66. So, scenario one for the bulls. All right, Nick signing out.